Hi, everyone. Welcome to the Business as Usual podcast. This is our December 2020 episode. Just so you're aware, you can follow us on Twitter and Instagram at BusinessAUPod. Without any delay, Mike, let's what we getting started with this week.
Let's get cracking. So, in this month's podcast, we're going to be looking at a couple of the biggest headlines from last month in the business world. You aren't you, Jack, going to be taking us through cost leadership versus differentiation leadership in 5 minutes?
Yeah.
Looking at the supermarket industry. Then we're going to look at another common misconception. So, why students often get it wrong about autocratic leadership / a power culture, which you might be looking at in A level at the moment. And then we're going to look at a few bits of data, market research data, give you something to interpret as practice, like you're doing the exam, and a couple of questions for GCSE and A level for you to get your teeth into.
Okay, great. So let's get started with the big news of today. Actually, we're recording this on Friday. This is what we do with our Friday nights. And the big news from today is it looks like Arcadia are on the brink of collapse. And this, by the time you listen to this, early December, you might have found that this has actually already happened. But it seems like it's inevitable. And to be honest, it seems like it's been inevitable for quite a while, doesn't it? So if you're not sure who Arcadia are, Arcadia is owned by, well, technically it's owned by Philip Green's wife, Tina Green. But Sir Philip Green's been the guy that in charge of this empire that he's built over the last several decades, including brands that you will have heard of like Topshop, Topman, Miss Selfridge, Dorothy Perkins, Wallace, Evans, Outfit, and Burton. And they employ over 15,000 people in the UK. So, Mike, I mean, before we get started, I think it's probably worth just a bit of a summary of what the administration process looks like for a business.
So, I mean, they've been looking to possibly go into voluntary liquidation, is what they're looking to go into. So they are looking to try and raise capital to meet some of their mounting debts that their creditors are starting to call in. So what usually happens in a business is you will become insolvent, which is what happens before bankruptcy. So you will have more outgoings than incomings, so more outflows and inflows. You'll be struggling to service those monthly expenditures such as rent on the stores. Eventually, suppliers will start to lose patience, and eventually they will get together with other suppliers and look to do a court action to try and get your company wound up, as they say it. So to get the court to get you in line, get the administrators in, and try and recover as much of the amount owed as possible. So that could be by vast cost cutting and the business carries on operating and it comes out of administration, as a fair few football teams have done, for example. Or it could be they actually force you to sell off most of the business, or you get taken over by maybe Mike Ashley, who could come in and asset strip your company. So yeah, it's a brutal it's a brutal process that isn't undertaken lightly. It's a lengthy process. It's been a long time coming. And I don't think COVID can be blamed completely for this one.
No, that definitely hasn't helped. Obviously, a lot of their stores are in a high street premises, and so as a result, the fact that we've had these lockdowns and people have been much more conservative with their shopping has had an impact, and it will have had an impact. But you're right. This has been coming for years. Arcadia has plateaued a decade ago, really, didn't they? They've, you can with most businesses, you can kind of assume that the primary objective of the business is growth. And I don't think if you looked at Arcadia's, spending, and if you looked at Arcadia's profit levels over the last 10 years, especially the last 10 years, you probably can't make that statement for Arcadia. It very much seems like their main objective was just to continue where they were, make 150 million pounds worth of profit a year, fund Philip Green's and Tina Green's yacht lifestyle in Monaco. And they haven't accelerated in ways that other businesses have, and they found themselves overtaken. They were overtaken by Zara and Inditex when Zara and Inditex took risks and went out to China, while Topshop at Arcadia basically refused to invest in anything that wouldn't pay back within a year or two. They've seen huge amounts of their customer base move to online shopping and e-commerce, such as ASOS, Boohoo.com. this has been coming for quite a long time, and you're right. I don't think we can really blame COVID for this one, but the consequences fall on the suppliers. The consequences fall on the members of staff who are very likely to lose their jobs in the coming months.
Yeah, I mean, I think the first real sign was back in 2018 when they first turned a huge loss. I think it was around 100 million pre-tax loss when they'd been making around, like you say, 150 million odd in previous years. So that was the first kind of signs that it was a not such a steady decline,
Yeah.
and for the reasons like you say, and very much like Marks and Spencers, it almost feels like a an objective of survival for years, which is never never a good thing. And obviously, all these people that are, well, we should say employees, that are going to lose their jobs are going to find it very hard to find another job, as everyone is feeling the pain.
Yeah, we've talked on this podcast so many times about the potential death of the high street, and this is just another example. I mentioned this in the staff room today, and one of my colleagues just looked at me like, she clearly spends quite a lot of. She thought that Arcadia would be able to survive based on the amount of her wages that she spends in there. But unfortunately, that looks like it's not going to be the case. Now, one thing that they're talking about is, and obviously the details are still to really come out. That the administrator hasn't quite been appointed yet, but it looks like they're going to try and have this sort of light touch administration where they kind of, the management group retain running of the company, but the administrators are appointed to effectively look at what assets within the business can be sold. And it sounds like they're going to try and sell off as much of it as possible so that they can meet those debts that they have. And one of you look at the portfolio of brands that Arcadia have. The two most sellable by quite a distance are Topshop and Miss Selfridge. And it sounds like there's a chance that Boohoo.com are sniffing around there and looking to maybe potentially, if the price is right, buy into that. But it'll be really interesting to see if, when that happens, or if that happens, they continue with the high street presence, or whether Boohoo's obviously an online based company, whether they try and just take up relationships and assets that Topshop and Miss Selfridge have, and try and sort of shift their online presence to 100% online presence.
Yeah, I mean, if anyone can take some of those ailing brands and modernize them, I suppose Boohoo are the ones to do it. So if they can see, I mean, I can't personally see the value in buying any of those brands, but if Boohoo think they can, then all the power to them.
We will see. The second news story, Mike.
Yeah, so I mean, we can't avoid this one, can we? We are looking at optimistically hoping we have a vaccine, or maybe even 3 vaccines to choose from, going into the new year.
Four, if
So
you
I,
believe the Russians, by the way.
it, what, the vodka? I don't think we count that as a don't count that as a vaccine. But yes, the Russians got a vaccine as well, have they?
They're saying they have. They're saying it's been really effective.
Yeah, I heard they've been testing it quite randomly on prison inmates, etc.
There's been, but
Not sure about that one.
the testing thing's been an interesting one, because there's been a bit of a. I don't know if it's the AstraZeneca one. One of them, it emerged earlier this week that most of their testing has been done on people under the age of 55, who obviously
Yes,
are not as affected by the coronavirus as people over the age of 60. And so there's obviously a long way to go, but nonetheless, it seems like it's a bit of a positive step, and the markets have reacted to that.
definitely. I mean, I was listening to what do I call it, an epidemiologist, is it? That was on the radio the other day, and they were saying that if they were going to take any of the vaccines, this would be the one, because it had a base code, if you will, that they have just altered, and it's been heavily tested. So it's just been a modified vaccine rather than the other vaccines from the firms abroad that have been from scratch. So um, yeah, it sounds like this is the one we've invested a lot in, isn't it? As in the UK, I think we've pre-bought many millions of
Millions.
vaccines. Yeah.
Did you see
So
the rumor that there was a rumor that the government wanted the Union Jack to be printed on the vaccine?
that
Did you
sounds
see?
very Boris Johnson, that one.
Did you see that rumor online?
I did not know.
I saw that online the other day. I don't know if it was a joke. I saw it on Twitter, so you never can really trust Twitter. But I just thought that was funny. The idea that,
Made in the
like,
UK rather than
just
made
to
in the
prove,
USA. Yeah,
that we're great at something,
I would
um,
totally do that myself.
then they'll put the Union Jack on the front. This suggestion is that hopefully, and this is hopefully, that we might be able to get to a point where by Easter we should be somewhat of a way back to normal. And it's funny to think actually, because do you remember in January we were doing a bit more of a regular news podcast, and we started talking about the coronavirus in January, and that was a good 2 months before it really hit into the UK, and we obviously went into lockdown in March. And there was a few weeks where we were talking about what impact will this virus have on businesses in the UK, but it wasn't because the entire economy would be closed and we'd be under lockdown. It was because whether they'd be able to get products from China where the virus originated, and other Asian areas, whether we'd be able to get supplies and products into the UK. And it's crazy, really, when you think back that we first talked about the coronavirus on this podcast nearly a year ago, um, and even then, had no idea it was going to turn out to be the way it has. Now, the stock market and economic projections being made by official national statistics and what have you seem to suggest, that there's been a bit of a lift in the stock market, um, and in these economic projections on the premise that if these vaccinations are effective moving forward, we might be able to get to some sort of normality in the next 6 months, hopefully. So it's just been interesting to see the impact of that. Even just one little bit of good news, you can see that news article from the headline on the screen from the 9th of November. Global stock markets rocket on vaccine hopes. And so it's just interesting to know how much the valuation of a business can be affected by a little bit of good news.
Yeah, I mean, this is rank speculation. If you look at the US, if you've heard Trump saying, the only things he can say these days to cheer himself up, the Nasdaq and the Dow Jones is at all-time highs, which is ridiculous in the middle of a pandemic. So I do worry that we may have a bit of a bubble forming in the stock markets, and we could see a lot of companies' stock prices bursting, plummeting down, because I do think a lot of them are overvalued considering. There's some that clearly aren't, such as the airlines, such as the banks that went down. I mean, the banks were never going to fail, so they have picked up, etc. But I do think there's quite a few shares in there are overvalued based on speculation, especially as not wanting to be a downer on anything, but even Easter for widespread vaccinations might be a little bit optimistic. So it'd be interesting, but it's definitely positive news.
Definitely.
But will there be many businesses still around to see that time?
Well, I hope so. But
So do I.
probably not Arcadia's. Let's wrap up the news stories then. So let's have a look at a topic in 5 minutes. So this is cost leadership versus differentiation leadership. And I did this with my GCSE group this week. And I thought it was, I stumbled across some statistics that really proved a point that I've been making to students for years. And so I thought it was worth sharing. Now, the Michael Porter's generic strategies talks about the two main methods and two main strategies in order which to adopt in order to retain a competitive advantage. He argues that you should either go for cost leadership, where you try and keep your cost as low as possible so you can charge the lowest possible prices, i.e., you lead on cost, or alternatively, go for differentiation. So trying to make your products unique, different compared to competitors, and as a result, maybe charge a higher markup, and you might have less sales, but you then be able to make up for the less sales with the higher markup and the higher profit margins. Porter's assertion was always that the best option is to be in one of those two strategies, and to be in the middle is a little bit, it's not the ideal. You're not super cheap, and you're also not truly differentiated. And so what you tend to find is when you're in the middle of a market, that if you have customers who are looking for something of a little bit more value, or maybe their circumstances change and they haven't got quite as much disposable income, then those customers will move from the middle to the cost leadership. Alternatively, if you're looking for, if the customers in the middle are looking for a little bit more quality, they'll go to the right. They'll go to the differentiation leadership businesses. But what you don't see very often is you don't see consumers going from cost leadership businesses to differentiation leadership businesses, unless their circumstances change drastically, like if they win the lottery or they get a really new high-paid job or something like that. And similarly, you don't see very many consumers go from differentiation leadership to cost leadership unless, again, their circumstances change, like they lose their job or something like that. So a really good example of a market to use this model with is the grocery market, because it so clearly emphasizes the benefits of having one of those two strategies. On the screen, if you're watching this on the YouTube version, you'll see that we've got our cost leadership businesses, Aldi, Lidl, and Iceland. They are obviously known for their very, very low prices and very sort of standard product ranges, a lot of own brand products. In fact, I think Aldi's solely own brand products. And then on the other side of the spectrum, you've got Waitrose and the Co-op. Waitrose known for their high quality and high price. The Co-op known for their sort of community work and their community ownership and their organic product ranges and a lot of local produce. And then you've got the four businesses in the middle who you're probably looking at and thinking, well, they're the biggest. And you are right that they are the biggest, but they're also the ones that are more susceptible to losing consumers. And what we're starting to see is we're starting to see a lot of consumers moving from the mid-market Sainsbury's, Asda, Tesco, and Morrison's over towards especially Aldi, Lidl, and Iceland. And we're not seeing that same movement from Waitrose. Waitrose and the Co-op aren't. They don't seem to be losing their customers. So I've found this table and put this table together, and it looks at the market share from 2012, 2015, 2018, 19, and 20, just so you can sort of see the pattern between between these businesses, their strategies, whether they're mid-market, low cost, or highly differentiated, and what's happened to their market share. And Mike, what did you find from this?
So, I mean, if we look at the table, it confirms that the big four, Tesco, Sainsbury's, Asda, and Morrison's, that are the mid-market operators, should be concerned. As you know, you may have seen news reports of their concern, even exam papers written of Tesco's concern, for example. So if we look at Tesco as an example, as the market leader in 2012, they had a strong 30.9%, technically kind of giving them a monopoly, according to the CMA, and they've slowly dropped over the years, over those 8 years up to 2020, to have just 26.9%, and that is a trend that every single one of the top four has seen. So they have all been looking to possibly shift to the cost leadership approach to try and do battle with the likes of Aldi and Lidl, who have all seen steady, significant increases in their market share. So this kind of does prove the point that you were saying, that Porter is right. If you are in the middle, you will start losing your competitive advantage, even if you have a strong competitive advantage to start with.
You look at this and you think that's over 8 years, and Tesco, Sainsbury's, Asda, Morrison's, they'll have looked at the data from 2012 to 2013, and they'll have noticed there's a start of decline, and they'll also have seen the likes of Aldi and Lidl. And yet, despite the fact that this has been a clear threat for 5-6 years at least, they haven't been able to do anything effectively about it. You've seen, something like, I think I read a statistic that said half of the population of the UK have visited an Aldi in the last 6 months. And you look at Tesco with their attempt at being low cost. They tried to release sort of kind of a spin-off called Jack's, which you'd think I'd love, given that that's my name and all the products had my name on. But it just didn't take off. It was effectively supposed to be Tesco's version of Aldi, all sort of own brand products, all manufactured in Britain, and they were going to that was going to be their big shift towards the low cost. And I think they were probably hoping that would take off, and it just hasn't. I think they've got 10 or 15 around the country. In 2 years, clearly that hasn't kicked on the way they would have liked it to. So hopefully this proves the point.
Yeah, definitely. Yeah, I mean, they put those Jack stores on in very deprived areas, didn't they? So maybe had the right idea, but it's tricky. They are very confused at Tesco. If you actually look at their strategy, they want to be cost leadership, possibly in the store, and then 1 year in their normal stores, and then the next year they are seeing the downsides of cost leadership in profit margin reduction. So they then flip flop to trying to go just highly differentiated again. So they have no clear strategy. So if you've got some shares in Tesco, sell them.
Potentially.
Moving on, moving on. So the new student misconception of the month. So you may have done leadership at the start of your A-level course, near the start, when you're looking at entrepreneurs.
You've just
done it, have you? Oh, okay. Cool. I know a lot of teachers teach it near the start when they're doing like what is an entrepreneur, and then they go into the difference between a leader. But yeah, you might have just done it as well. And if you're in A-level, you may be coming up to doing culture, Handy's culture model, or you might have already done it, if as I know a few other teachers have. So one common misconception is that autocratic leadership or a power culture is necessarily bad for a business. So this is something that I see a lot of students do in class and exam papers, and it's just not. It's a bit too simplistic for A-level standard. If it was a GCSE topic, then fair play. But at A-level standard, it's not as cut and dry on that. So some businesses will actually see benefits from having an autocratic leadership style or a power culture. And one example of that is Sports Direct, for all the stick they've been getting, and Mike Ashley's been getting over the years, for 0-hour contracts, draconian management styles. That every single year for the last 10 years, they've seen revenue going up. they've seen market share going up, they've seen share prices going up, apart from one dip when they were on Panorama for using such draconian autocratic leadership styles. But at the end of the day, the results do speak for themselves in that kind of business. So there are businesses where autocratic leadership, a power culture, can actually give results if that's the kind of objectives you've set for
Yeah,
your
we
business.
talk about this with I talked about this literally, I think last week. We've just finished leadership with my year 12s, and it's really, when you ask the students which one would you rather work for, none of them say autocratic, because it's this, the feeling of being told what to do, and the feeling of not having an input into the business. But in reality, we always try and focus on whether the job is high skill or low skilled, because if it's a low skilled job, sometimes
Mm.
actually it's better to have autocratic leadership where the employees know exactly what's expected of them, they know exactly what they need to be doing. And if it's a low skilled job, they might have low skilled employees or lower skilled employees who might not want necessarily the pressure of having to suggest things for the business to improve on. They might just want to turn up and do their job and know exactly what it is they need to do. The other key thing is decision making. It's much easier to have a clear decision where everyone knows exactly what is expected when you've got an autocratic or power leadership or power culture, because usually that is going to be very centralized, isn't it? You're going to have one person or one small group of people making the decision. And so as a result, decisions are made very quickly, might allow them to react to trends a little bit quicker. So definitely are situations where this is a positive. And the last little bit I'd just say on this is, when you look at key examples of entrepreneurs and really famous entrepreneurs, the likes of Steve Jobs, the likes of Jeff Bezos, the likes of Mike Ashley. As much as I can't stand the man because of what he does to my football club, I can't deny the fact that he has become a very successful businessman. A lot of them are autocratic, and it's because they have had an idea. It has worked so successfully for them. It's made them very, very rich. And so as a result, there's a level of entitlement that they feel that their opinion is the most important one, because it's led to them being so successful. It's led to their businesses being so successful. And you can't really argue with that, can you?
No, you can't argue with results. I mean, another kind of, not to make this even more complicated, but another thing that, say, an A-star student would realize is that you can't necessarily pigeonhole a whole company into one leadership style. So even though Mike Ashley comes across very, brash, autocratic, and most of his managers, from what I have seen, follow that example, you will have some that are paternalistic. The whole good cop, bad cop scenario, and
Which
that's
one are
what
you in this podcast?
sometimes you could argue works best. Well, I'm clearly the
You
autocratic one,
reckon?
aren't I? That's what I'm told at school.
Paranoid.
That's what I'm told. No one wants me for parents'
No.
evening. Trust me. So yeah, don't oversimplify. It's good if you can have a mix, but there will be a predominant. That's the word I would use if I was talking about leadership styles in a business or the culture of a business. There's probably a predominant culture, or there's a predominant leadership style that is apparent and works well. What doesn't work well, that's for you to
It's
assess.
definitely quite naive, isn't it, to assume that democratic good or autocratic bad. It's very simplistic, as you say. The last part of this podcast is we're going to provide you with an A-level question and a GCSE exam question. And we put a little bit of a twist on this one because, a lot of teachers quite often say that students find it difficult to use data effectively and interpret data effectively. And so we've put together a PDF with about 6 figures of data, so six short extracts, and they're all about the same context. They're all about Google looking to enter the VR market. And so they've collected some market research data. We've put a question for GCSE students, which is analyze the importance to Google of market research data as they look to enter the VR headset market. And the key focus there is make sure you're using the data, looking at the data. What does it tell you? How would that finding that is in that data help Google with their decision? And we've also got an A-level question as well, which is using the data and extracts provided, assess 2 reasons Google should enter the VR headset market. So not only will you have to find some reasons in the data that demonstrate that this is the right decision, but you'll also see if you can find anything that might be a however, or think about maybe some other things you might know about competition that you might potentially be able to bring into that answer. Mike, you got anything to add on those exam questions?
No, I mean, I'll just agree with you. When I write case studies, when I write exam papers, I often put the hidden gems within the data. That A-star point that makes you go, "Wow, that's a 12 out of 12." That is in your conclusion or whatever. So look in the data. For example, Figure 1 has definitely got a gem in there. If you can have a look into that, look for the gem. Look for what's going to set you apart from an A grade student or a B grade student, and if in GCSE, what's going to tell you apart from a grade 9 to a grade 7. So look in there. Don't avoid the data like a lot of students do, because you either don't like maths or it's just it's all too much under the pressure. Get used to it. Try and use the data as much as you can, and that's how you're going to be getting those top level answers.
Definitely. I'm gonna chuck one other thing on our website, which is linked on the screen now, to get the resources from this podcast and the resource I'm about to talk about. Just visit our website, which is www.edifyed.co.uk/business. You will also find these linked on our Twitter and Instagram, which is also on the screen. I'm going to share on the website a Excel spreadsheet that I made for my students, which contains all of the past exam questions for the Edexcel A level. And you're able to click the sort of criteria on the right hand side to choose particular topics so that you can find exam questions to practice in your own time. I guess I just sort of echo what Mike said. Exam practice is all about practice. You know, if you're not comfortable with writing and using data, the only way to get better at that is to practice it. And so hopefully if we can provide you with some exam questions to do, then you might find, you know, you've got a resource there that allows you to do as many exam questions as you possibly can. Um,
It's a
yeah, yeah.
great tool.
You started using it?
Yeah, we spruced it up a little bit, didn't we?
Mhm.
And yeah, definitely, I've been using it
Yeah,
myself to find an exam question for a topic like on culture the other day. So yeah, very handy. We could even do a quick like 2 minute just tutorial video to show you how to
yeah,
use it if people if you see a lot
yeah.
of downloads. So yeah, very useful for teachers or students
Definitely.
alike.
Right. So this will be posted early December, and we will be back in the new year, unless there's something really big that happens. So have a good Christmas. Hopefully, you're able to spend much of it with your families and what have you. And stay safe. And we will see you in the new year.
Yeah, have a safe Christmas, guys.